Hello, this is ChewDog Charts. Now we have bubbles in the real estate market, the stock market, and the bond market. And there are a lot of risks out there we need to keep our eye on. One of those risks is China. The key thing to keep in mind about China is now that the 19th Party Congress is over, the Chinese government is likely to tolerate lower growth. It's been stated that a rate of 6.3% growth in 2018 to 2020 would be acceptable. This indicates that growth will likely slow in 2018, and as we can see, the economic data suggests that the economic cycle is indeed already cooling. So here are three big red flags involving the Chinese economy we need to keep our eye on. So let's take a look. This chart shows the fixed asset investment growth, both nominal and real. As you can see in the 2008-2009 timeframe, both real and nominal growth were substantial. However, they dropped significantly following the crisis. There was a rebound with the infusion of cash by the Chinese government, but subsequent to the 2011-2012 timeframe, both nominal and real growth have been declining. In fact, for the first time since the fourth quarter of 2004, the fixed asset investment growth, real, has turned negative. Nominal is also dropping. This chart here shows that the growth of property sales for China has also turned negative as well in October, the first time since 2015. Doesn't look like there's going to be a bottom at this time yet, nor does there look like there's any improvement. The property market boom in Tier 3 cities is also losing momentum, as shown by this chart, which indicates that residential land sales volume is declining. Two other main risks facing China include rising inflation and rising interest rates. With regard to inflation, headline CPI masks an important underlying trend. The non-food inflation has been rising relatively steadily. It reached about 2.4% in October, which is considered unusually high compared to the historic average of 1.3%. This has been driven by prices in services such as healthcare, which were up 7.2%, education up 2.8%, and domestic services up 4.3%. Headline CPI inflation is expected to reach about 3.1% by February 2018. If inflation becomes persistently high, the Chinese central bank won't have any flexibility. They won't be able to loosen monetary conditions, and in fact, they may have to tighten further. As you can see here, interest rates are climbing, particularly in China, as compared with the U.S. This shows the 10-year government bond yield, where China's yield is reaching toward 3%, and the 10-year yield in the U.S. is still below 2.5%. What we're looking at here is the 20-year monthly chart on FXI, which is the iShares China Large Cap ETF, using realtimestockquote.com. And we can see here that the stock bottomed in early 2016 and had a fairly decent rise into the current time frame. Looking at the MACD, we also show a bottoming here in early mid-2016 and then the subsequent rise. And looking at the current time frame, it looks like we may have some acceleration. We see the acceleration here in the MACD histogram with the continued rise. No top indicated yet. The momentum indicator also confirms what we see in the histogram and the MACD, moving into the relative strength index, the RSI. We have a very healthy 82.14 moving into overbought territory. We haven't seen that overbought territory since here in early 2015 and then in the late 2006-2007 time frame. Moving down to the stochastics, we also are in overbought territory here. And the fast line and the slow line both look like they're beginning to curve, but no top indicated yet. Maybe a mature oscillator here, but not a top indicated at this point in time. The volume is declining. That's not a sign that you necessarily want to see and indicates some exhaustion in the price. Moving through to the Williams also is very mature up here in the negative 20 to 0 area, which indicates an overbought condition, but not quite seeing a top yet. We'll have to wait and see what happens here with this sawtoothing. Moving back up into the price chart, we do see that it is moving up quite strongly, but given some of the oscillators in overbought territory, I'd want to watch this and be patient, perhaps wait for a pullback. Also, continue to do your fundamental analysis. And as always, I do not have a position in FXI, either long or short. So for today, that's ChewDog Charts. Thank you.